Hey everybody, this is John and welcome to the free video. So a couple of interesting things setting up on the bigger time frame. So on a weekly chart, Microsoft here looking explosive. All right, so we're looking at setting up some bullish positions on this, not only going into the long 3-day weekend, but also in anticipation of this squeeze firing off. And in addition to this, for those of you that don't know, the NASDAQ is also setting up on a weekly squeeze. You can see that the last time that this happened, the significant move that this had before it ran out of juice. All right, so keeping a close eye on that. It's not yet quite close to triggering. Okay, how do we know that? Well, when there's a weekly squeeze like this, I also track these bands, and the squeeze triggers when these bands kind of start hooking back up. So we're not quite ready yet, but certainly can look at some smaller kind of time trades that we can do around that. Now I am looking for the markets to kind of grind and rally into the long 3-day weekend. You can see right now that the weekly chart on the S&Ps, we're up like a point after hours. If we drill down to a 30-minute chart here, you can see that after this morning's sell-off right into the mogul line, okay, and we had some good EMA crossover signals on this, which I'll talk about in a second. Here we are back along here. So I am actually looking for shorts to get stopped out as we go into the 3-day weekend. All right, and we want to take advantage of that. And so I guess, that brings up a question too, just how to time this stuff, because it can be really scary if a market's falling like this, right? And it's like, all right, how do we time this? What tools do we use? How do we manage this? And so let's take a quick look at that. So a couple things I wanted to cover here real quick. So we did a short trade in the S&Ps in the room yesterday up here, and had a nice move this morning. And so a couple questions came up like, how did you know to short there? All right, and so I'll talk about that in a second. And part of it is just having nice triggers. And we didn't have a lot of contracts, but still made $4,600 on the trade. And the triggers on this, in a nutshell, are just being able to watch moving average crossovers on multiple time frames. So instead of sitting there going like, okay, I'm going to look for a crossover on the 30-minute chart, I could sit there and watch the 1, 2, 3, 4, 5, all the way up the ladder as it rolled. And watching these against those levels has been phenomenal in terms of getting an early confirmed trigger. And you can see what happens here is that as you're, it's like boom, then the 2-minute goes, right? And then boom, the 3-minute goes. So you can see it rolling in your favor like that. And that's been super, super helpful. In addition to that, when we get these things happening when there's a squeeze. So last week, if you guys remember, the spiders were trading right around 267, and then we got that hook in the EMAs. And by the way, they'd already started happening on the 2-hour and the 4-hour, so we had a heads up. And so when you see this with a squeeze, bam, here we got a quick 7-point move. And we, instead of waiting for the squeeze to already fire, in this case the move is over, we were able to get in nice and early and at a very safe entry. So in addition to that, what I just call, it's an EMA crossover high probability trigger alert, I was also asking the question of, all right, how do we know when we're in a trade? Like my favorite target is the 1272 extension. I don't know about you guys. But how come, and combine that with the squeeze, and sometimes when I'm in a trade, it'll slam into the 1272 extension, and even the 1618, and my targets will be hit, and it's easy. And then other times, it just peters out before it even gets near there. Okay, and so you can see like over here in BABA, same thing, here's a squeeze, and this thing not only slams into the 1272, but the 1618 and even higher. And so the next question that came up in terms of putting the odds in my favor and reducing mistakes and knowing when to get out early, because it has no chance of hitting my target, was just having a tool that would tell me that in advance. So Eric, after a couple of months, came up with these dynamic profit zones. And you can see with NVIDIA, so notice here that the profit zones are here, and they're not anywhere near the 1618, 127 zone. Okay, now keep that in mind as we go to the next slide. On the next slide for Alibaba, you can see that when we had the squeeze, these profit zones were actually in the 1272 and 1618 extension. And so I've been using this, and now I can tell in advance, like, okay, yeah, there's this thing going off, but in this particular case, you know, I'm looking actually for a double top. It's not going to break out, or if it does break out, it's going to be short-lived, so I'm going to get out soon. Whereas in this particular case, I'm going to hold on because there's a high likelihood that we're going to be able to get up there because of these zones. All right. So the biggest thing, so anyway, that's great. But the biggest thing that I found, the frustration that it saves, is, for example, on a stock like Nvidia, where, you know, you buy your call options and you place your limit order and you got your limit orders up here. So not only did it not reach it, but it came all the way back and stopped you out. And it's just frustrating because it's a mistake, and over time it can impact the compounding of your gains. And so by eliminating that and knowing in advance that this thing is, look, it's not going to make it, get out early, over time it has an exponential impact on your account. And then last but not least, Eric put this tool together for me because he knows I like to geek out on this stuff. But here you've got all the bullish stats for price in relationship to its key moving averages, and then all the bearish stats. So what are some of the things here that you can get out of this? First of all, and this is for Adobe. For Adobe, okay, what we can from this data is telling us, hey, look, if price breaks below the 8 EMA, it will still stay above the 21 EMA. All right, so here, picture this. So here's the 8 and here's the 21. So if price, you know, we're going higher, and then it breaks below the 8, it'll still stay above the 21 EMA before breaking back up above the 8 45% of the time. Okay, so that means when it breaks the 8 and gets near the 21, it is a huge buying opportunity. All right, I just thought that was a really cool stat. It also tells us that the best EMA of all time on this stock, and it's different for each stock because this tool measures kind of the personality and history of the stock, is the 13. So if I know that, I can set an alert, and anytime Adobe's back to the 13, I'm a buyer. Okay. And then the other cool stat here, and there's other stats on here, I'm not going to go into all of them, but that, you know, we're talking about this case here, but when it does cross back up above the 8 EMA, on average, it will rally 2.7% over 4 bars. So anyway, this is like a tool just to geek out on, and I find it fascinating. And at the end of the day, trading is about continuous improvement. I mean, we all know we have to have an edge, and anything that gives us an edge compounds our gains over time, which is critical. So, you know, the idea with this is that, you know, without an edge, you know, with an edge, our gains can kind of take off exponentially. Without an edge, even if we're doing well, we're lagging behind, okay? And that's just simply from, hey, you could have gotten out for a $1,000 profit at the lower target had you known it had no chance to get to the higher target instead of getting stopped out. That's a huge difference over time. So I'm going to be doing a class on all of these, and this class will include these tools. So the strategy class is $697. If you are a member, it is just $497. The strategy class includes 4-hour strategy on how to use the multi-cross indicator, plus a checklist of the best strategies to use. For example, hey, if you come against Carolyn's level and you got this, this, and this, you want to do a call debit spread, or, you know, you want to buy a call, or you want to sell a put credit spread. So it's going to be going through all of that stuff. And it also includes that multi-cross indicator. For the Pro version, which is $1297 for non-members but $897 for members, you're getting the 4-hour strategy class, which it's coming up on June 2nd, by the way, the multi-cross tool, as well as the dynamic profit zones tool. That's what we were talking about on Nvidia versus Alibaba, and knowing, like, all right, where is price likely to go? And it also includes 3 days of live trading, okay, which is a fantastic way to obviously learn this stuff. And then the Elite package, which is $1297 for members, includes all that, plus that deep stats tool, if that's something that you really want to geek out on, okay? So if you are interested in this, because it's just fantastic tools that these come out, and the idea of just the, you know, the ROI that we're going to get on just being able to kind of knowing when to get out of these things and when to time them better, you know, it's hard to measure the impact of that over time. But if you go to simplertrading.com/DPT, it'll bring you up to the sales page. Now, if you're looking at this and you're like, okay, well, I'm not a member. Well, on the sales page, you can just click there, and you can actually just sign up for a trial, all right? You know, do that, and then you'll be a member, and then you can become and get the member price. And then just keep in mind, to get the member price, you need to be signed in. All right. So if you remember, just sign in, and then bring up this page, and you'll be good to go. All right. If you guys have any questions, of course, give us a call. This is going to be a fantastic class, fantastic tools. I'm looking forward to working with you on it, and we'll see you at the next update.